Our first guest joins us this morning. Phil Streible, the Chief Market Strategist at Blue Line Futures, is here to talk commodities. And Phil, in a timely manner, we appreciate you sharing your Tuesday with us here this morning because thanks to you, a big move in crude yesterday. We saw that spike up, continuation in the overnight session to 115. I'm wondering, is it more tied to the news over the weekend that we were going to see, what was it, Norway and Finland apply for applications or submit applications to NATO to become NATO members, or China lockdown fears kind of diminishing as the zero tolerance policy seems to potentially being lifted?
Well, if you look at that, that first clip that you just mentioned here with Sweden and Finland joining NATO, I mean, that's going to prolong the war, the conflict, and then also increase some geopolitical tension. So that's going to underpin prices. Then if you look at, as soon as crude oil goes negative on the day, what they cite is that it is weaker economic data. Every time it rallies, you're talking about an end of a lockdown in Shanghai. The reality is that the price action doesn't lie, and you're seeing a series of higher lows, and it looks like it's going to break out to a higher high. So I would definitely not want to short this market at these levels. I'd wait for any kind of pullback here. And again, it's higher lows. So those mid 90 prices are gone. The high 90 prices are gone. Now you're going to have to wait for any kind of correction back below like 105.
We've been talking about how this is in relatively calm conditions here. We're looking at this recent rally again from 98, where we found some support. It doesn't seem like we spent a lot of time recently below that 100 level, back up to 115. Phil, price is king. We always talk about that. In this rally, as you mentioned, kind of the opposite of what we've seen in the indices in terms of short-lived run-ups in the indices, short-lived dips here in the crude. Talk to us, though. Does this open up the door for a retest of 130 ultimately? I mean, it feels like we're on the edge of, if we were to get some sort of supply disruption, some sort of, backlash from Putin, ultimately, we're not far from that key level that we saw earlier this year.
You're going to see a whole nother wave of, short covering anyone who tried to short against that rally. So that's going to fuel and extend that rally upwards. 130, we'll have to wait. There's a lot of there's a lot of price points between here and there. So, you still got 115, 120, 125, then 130. So a lot of different levels before we poke up there. We got to watch the other, energies as well. Heating oil, RBOB, those have been going up intensely. See if there's any kind of demand destruction. I mean, if you look on your Facebook, half your friends are posting pictures of, $100 plus to fill their gas tanks up. So, I think it is doing something. We'll see how Memorial Day weekend, if it damages any of the, the driving and the, the tourism.
I want to talk about those products in a minute, but in terms of crude, are you seeing any easing in terms of price pressures coming from the production side here in the U.S. or at OPEC for that matter?
It doesn't seem like it. I mean, they don't have a lot of spare capacity in any way, and I think that they're just making too much money at these price levels. I mean, they might as well keep capacity down and keep driving up prices. And I mean, that's the way a business runs. That's the way this country is run. They don't care if, it's hurting us at all. The politics will end up playing a role in whether U.S. Production increases or not. So it'd be nice to see us take the reins and try and get these prices down by, pumping excess crude. But, that's another fish to fry.
Yeah, talking about the indices, which have been coming under pressure, volatility relatively elevated. Again, I mentioned at the top of the show, back down below 30. But when you take a look at some of these individual names, I've got one here, Occidental, for example, OXY. I mean, look at this, recently up to 69. We're talking new highs for the year. So, again, a significant run up here as they've been the beneficiaries thereof. And that's just one of a handful of names. We've actually been kind of keeping a look at some of these individual players here as well. Talk to us about RBOB, though, gasoline futures. We know we're at record highs. You mentioned Facebook pictures and prices at the pump impacting everybody's, sentiment in general, it seems like, and kind of that positive mindset. But it seems like gasoline's been leading in many instances, the crude move higher here.
Yeah, it definitely is. And I mean, if you're any kind of, producer, you're going to lift some of your hedges. And if you are an end user that needs gasoline and things like that, you're going to have to lock in these prices on any kind of weakness whatsoever. So there's a continuous underlying bid. I was just thinking about I live on the beach, the ice cream man driving around. I wonder if he's making any money with these high gas prices.
Yeah.
So.
Or the Uber drivers. I mean, it seems like that was an issue we heard about recently, but that's only getting worse here.
Yeah, they got to be lifting their prices. So, yeah,
Walmart, trucks ultimately, diesel at record levels as well. I mean, the problem's widespread.
Yeah, that's why your shipping costs, like to send something cross country is at record highs right now. So we'll see. We'll see how long this can last. The biggest impact, I know we got retail sales coming out, but when you see high energy prices, you see high food prices, that directly impacts someone's capital spending, discretionary income. I know if I have to, feed a large family and have to drive and commute to work, we're definitely not going to be spending excess money on, a new pair of Nikes and a new pair of, new shirt and things like that. So I think retail sales got to come down.
Does this sort of tip the scales towards, a little bit more heated debate in terms of stagflation, potentially recession?
100%. I mean, you have to get that. You're going to have these. Food is always the last to go. So you'll see energy prices eventually will tip the scale. There's a lot of commodities out there that are not rallying to new highs, like things like lumber right now. That's making a lower low. That'll impact the housing market. Those higher borrowing costs will weigh in on the consumer. So they're getting hit from three angles: borrowing costs, food, and energy. I heard a lot of people complaining that, they received letters in the mail that their heating bills are going to go up if they use like natural gas and things like that. So there's going to be a lot of backlash. No telling what's going to tip the scale, but this inflation is going to be around. It's going to be sticky in those areas for a long time. Natural
gas up through $8. We're looking at it here right now. Still short of that high that we saw earlier this month. We're talking about $8.99 it got up to. But if you look at where we were to begin the year, down around $3.50, I mean, you can see the significant the impact that has. And we know that hits the pocketbooks ultimately when gas utilities like this ultimately double in price. Talk to us lastly about grains. We didn't get too much into that, Phil. I know you keep an eye on them. Corn, wheat. Well, wheat really on the move here amidst some of those supplies that have been locked in terms of Ukraine. Recently, the WASD report I saw. And, well, when you're speaking about elevated prices, it's not just at the pump, it's at the checkout line as well as a result.
You have the number 1 and the number 5 wheat producer in a conflict right now. The number 2 wheat producer just came out and said that they're going to cut off exports.
India,
they were the ones to fill,
you're talking about, right?
Yeah. The ones to fill the hole, yes. And then they said that, and I see what they did. They have all this excess wheat that they were going to send out. Then all of a sudden they get hit with a heat wave.
Right.
Now that crop doesn't look as good, and they're saying, hey, we need to feed our people before we start exporting to other people. So you saw a lot of those contracts are not getting renewed for Indian wheat. And what's happening is you have other countries like Egypt, Turkey, things like that. They're going to scramble and they need to secure supplies elsewhere. And I can tell you the growing conditions for the U.S. is not that great in the Northwest. They've been hot. They've been dry. Planting has been slower than expected. So I think wheat, you get any kind of break on wheat, I think that could be a really good trade.
All right, lots to watch here in terms of commodities. Phil, appreciate you joining us here. Great breakdown across the board. Phil Streible.